I think we could see like a 50% correction in the market. I mean, we've seen it happen multiple times before. So there could be a big unwinding event.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 5th through February 12th, 2024, while supplies last. This week we have silver Valcambi or Asahi 100-ounce bars at just $1.39 over spot per ounce. We also feature pre-1933 gold $10 and $20 Liberties at $89 over melt and $139 over melt, respectively. Next, backdated 1-ounce silver maples are at $3.75 over spot with a minimum order of 50. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Hey, thanks for having me, Elijah. Always a pleasure.
Well, it's great to have you today. I did want to discuss the gold and silver markets first and foremost. It seems like we've been seeing a bit of weakness here, especially in silver as it's dipping below $23 again. Gold is still holding above that $2,000 level. Your take on what we're seeing?
Sure. Yeah. If we, I'll share my screen here. I'll just show you we'll start off with gold and we'll take a look at the monthly chart, which I find is really important to understand the overall cycles here in the market. If we take a look at gold, we can see gold has been in this pretty major cycle to the upsides since 2019. And really it's testing and flirting with breaking to new highs. We are in this type of scenario right now, very similar to what we saw just before the 2008 stock market crisis, the financial reset, where gold had about a 34% pullback. And right now, we're really in this section right here where we had a multi-year kind of pause just before the stock market topped. And what we see time and time again is we see precious metals rally up just before or as the stock market is topping. And it becomes one of the leading safe defensive plays for investors. And so we've already seen a push up and we are flirting with having another run up. In fact, the short-term chart is pointing to about $2,360 for gold over the next couple of months or a few months. And that is, to me, if we see that happen, that probably means the stock market is either topping or it is having one final push, an exhaustion move to the upside. Because what happens is typically just before a trend reverses, we tend to see some of the biggest moves take place, which we saw back over here in 2011 for gold. But this is the same for pretty much all assets. Just before a major trend ends, we see like a huge move up, a blow off top, and then we see price reverse. So I think the stock market could actually have that blow off top in the next month or over the next few months going into May. And I think gold could rally with that. And then we're probably going to see the stock market correct. It'll pull gold and silver down with it. But, if we zoom in just to this daily chart of gold, so I can show you how I'm coming up with this short-term price pattern. If we just look at gold in this recent rally and this pause, this is a pennant formation known as a halfway move. So this move up, is considered the halfway point, and then it's going to have another leg higher. So using Fibonacci extensions, we can take the low to the high and then down to this low and carry that forward. And that shows us where this momentum from this low to this high should carry through, which is around the $2,316 mark. So that is pretty exciting. This could be a multi-month move and one final push here higher before I think maybe gold hits a little bit of a rough patch because of potential a bear market in equities, which creates forced liquidation and selling even of defensive plays like gold temporarily. So that's kind of my view on gold.
I did want to get into the stock market and how it seems like we're in that maybe final blow off top phase. But before we do, if we could touch on silver, I know it's been pretty weak recently. Your perspective on where we are there?
Yeah, when we look at silver, you look at this daily chart. I mean, it's pretty much just sideways, really choppy. It really is, in my opinion, it's a nightmare to trade. It is really volatile. It's trendless. The best thing probably be just to sell sell options on it, just collect premiums over time. But It is building a base and a launch pad. When we look at the big monthly chart, like gold, while it's not trading up near all-time highs like gold, silver has carved out a rounding bottom. It's had an initial pop and breakout in 2019, 2020. It really started to pop and break out. And it's flagging sideways here. And it is really just got to put it in its time. I think we could see silver run up and have a push higher, maybe back up to around $30 an ounce. Again, it's very similar to what we saw just before the last stock market correction. We see gold, silver rally up, and then they can pull back with the sell-off in the stock market. So I am fairly bullish on precious metals for the next few months, but then I am a little bit bearish because I think they're going to pause and pull back for that one last opportunity before I think we go into a multi-year rally. And I think silver will go ballistic like it pretty much always does. It's underperforming considering gold right now, but once the trend takes place, silver dramatically outperforms gold percentage wise. So they both kind of have play their role. Gold is that slow moving global defensive play that people buy gold and they just kind of hold on to it. Silver is a lot more volatile, and people actively trade it, and there's less volume and liquidity, so it moves around a lot faster. So I like them both. And I think, silver, as you mentioned, has been selling off the last 3 months. It has been moving down, but it's holding its ground. It's right at a very critical level where it's found support before. It's at key moving averages. And I think we could see a push up to maybe $32 an ounce over the next few months, because I do think the stock market is actually ready for one final blow off rally. And the saying goes, sell in May and go away. I think we could actually see that in the equities market. If we pull the SPY up, the ETF for it, we saw the stock market do exactly what it does on average every year. And if we go back to last year's price action, we tend to see the stock market rally up through the beginning of the year. It usually tops out June, July. It usually pulls back into October. And then we see it start to rally and have that big push up. This is the seasonality. If anybody pulls up a seasonality chart of the SP 500, that is how the market moves. And so right now we are in this phase here where the market could rally up into May, June this year. And so I think we're trading at all-time highs with the SP 500. And I think this could continue to push up. And I think it could pick up speed a lot because based on my sentiment indicators and the volume flows going on, believe it or not, we are seeing a lot of people shorting this market. And even though people are shorting it, it's still going higher. And when we have this massive disconnect, like the level we're seeing right now, the market's going to want to keep going higher and higher and apply maximum pain. And it creates a big pop in equities. And we might see this big rally for another couple of months take place and then eventually top out and it'll pull everything down with it. So, in the grand scheme of things, I'm bullish on the stock market, precious metals for the next couple of months at this point. And then I think we're going to go into a little bit more difficult times.
I know you've showed before the chart that you created of kind of how a bull market plays out and then how the crash plays out. And you've talked about us really being in the complacency stage. And I think a lot of people, when we saw the pullback in 2022, were thinking that, we're not going to make new highs. Did you want to update your view on that, kind of where we are in the general cycle of things for this bull market and then crash?
Yeah. So the way I break the market up is I've taken this from Stan Weinstein. He breaks the market into 4 stages. And a stage 2 is a bull market stage. And a stage 3 is it's a topping phase. So we're starting to see sectors have been struggling really for the past 2 years, individual sectors. We've seen gold do exceptionally well. It's holding up near the highs. Gold is actually one of those really strong assets that I don't have the chart here, but gold performs really well and holds up the best during a stage 3 topping phase. And that is exactly what we've seen. Investors have been moving to gold, holding it, and gold is making new all-time highs. So is the stock market, but the stock market indexes, while they're at new all-time highs, most stocks are actually down and are in bear markets. People don't realize that. The big tech companies are lifting the indexes, masking the damage that's actually being done. So we are still in this, what I believe, a topping stage. The indexes can make still nominal new highs. And then I think we're going to go into a big stage 4 decline, which is that bear market stage that'll pull gold and silver down temporarily. And a stage 4 decline is a bear market. It's like what we saw in 2008, the financial crisis. It's also the same thing that happened after the tech bubble in 2001. That one lasted a few years. So stage 4s, I mean, they're very serious events. They're usually pretty big, and they reset assets across the board, from precious metals to real estate to stocks, currencies, you name it. It's a cleansing event. It's actually a good thing. It's just you don't want to be caught on the wrong side, having your money parked in the markets when it's collapsing.
Now, when it comes to the precious metals, I know typically when we see a stock market crash, at least this is what happened back in 2008, is we saw a pullback in the metals, but they recovered quite quickly. And it seemed like faster than the stock market recovered. What is your outlook with respect to precious metals there? Do you see them recovering quickly after the crash?
I do. We've seen precious metals typically they're kind of one of those first things to actually recover. In some cases, they recover, like in a bear market, they'll recover a month or two before the stock market even bottoms. So they're a really good early warning sign. And I think part of the reason that is eventually, forced liquidation runs out of steam, margin calls, all these people who are over leveraged on the wrong side of the markets. And then what happens is people start to give up on the stock market. They're like, I am done with all this digital money and owning, the stock market, and it just keeps collapsing. They're like, I want to go to something physical. Just give me something that I know isn't going to just vaporize. And so people start to move to precious metals. They also start to give up on the financial system. They're starting to worry about currencies and banks and all that stuff. So people, when there's blood in the streets and they're panicking, they're just like, give me my physical money and I'm going to store it myself. And that's why I think we see precious metals, are one of the first to firm up. And then, of course, it's in favor for years, because a bear market, stage 4 decline, permanently damages people's psyche about investing. And so now people favor precious metals for a long time. They're like, forget it. I'm not doing the stock market. I'm just going to keep buying gold coins, silver bars and all that stuff. So it's a lasting effect. That's why we can see these very long multi-year rallies in precious metals, because people just lost their shirts in the stock market and they're like, just put me in a physical asset.
It's interesting because it seems like people have very short memories, right? And what the last couple of years have done in the markets, that's kind of how they expect the markets to move in the future. I did want to ask you, because you definitely look at multiple different markets and base your forecast off of looking at a variety of indicators. You also study the US dollar. What is that showing right now for you?
Yeah, the US dollar, I mean, it really is firming up. It's had a pullback over the last year and change, but it has formed a bottom and it is starting to move higher. And I do believe we're going to see it continue to push up. And typically when the stock market is in a big decline, a bear market, that is when the dollar really takes off. People liquidate, people naturally want to own, or currency values shuffle, and it really pushes the US dollar up. It still is the global reserve currency, and it tends to go up during a bear market, which is part of the reason why precious metals go down or commodities go down, is because the dollar strengthens and it applies pressure to commodities. What's really interesting, Elijah, is that last week there was a string of news events that I saw across routers, and one of them was they were talking about the active investor has now pulled the plug. They're done. It's been record amounts of money moving back into the passive investing strategy, which is the buy and hope or the buy and hold strategy. And that's because really since March of 2021, when sectors in the stage 3 started, sectors crashed, they're all down huge. People have lost their shirts. They're realizing it's not easy to make money. And so they're giving up. They're like, I can't trade. I can't do it. And they're all going back to this, plop your money in the market. And that to me is like the one of the final straws, that everyone now is giving up and they're putting all their money in the market just to buy and hold. And then we go off this cliff and the cycle rinse and repeats. They lose a ton of their money during a stage 4 decline. And they're like, I can't afford to do that. And then they eventually get back into like, I got to manage my own money, a year from now. And then it goes back into this cycle. So the fact that everybody's shifting and giving up on trading and just going back to the diversified portfolio is definitely a sign that active traders have fizzled out, they're burnt out, they've blown up their accounts, and we're on one last push here of the stock market before I think it goes off a cliff.
Now, what will be some of the indicators that you see that this crash is about to start?
Yeah, I mean, I'm a technical trader, so I follow price action. So we will need a huge drop, a sharp correction. We want to see heavy volume selling. We want to see lots of selling in the big techs. We want to see that momentum stall, because as long as the big technology companies are muscling their way higher, there's not much to stop the indexes. We are seeing the indexes move up, and the Russell 2000 is moving down. Simply that's because that's the small cap aggressive stocks that most people have lost their shirts in. And so there's a lot of different things that come into play, but the biggest thing will be big technology stocks have to lose their momentum, confirm that they're in a downtrend, and when they're in a downtrend, they're going to pull the rest of the market down, and then the bias will just kick in. People will want to naturally get out of equities, and the waterfall sell-off starts. That could last months. It could even last a couple of years, like the 2001 bubble that burst.
And as for a general size of the crash, are you looking for 50%? Some people are even more dramatically looking for 80%. What is your thought process on that?
Yeah, originally, early last year, I was looking for about a 30% pullback or so, but we were also down about 25%. So now that we're back up near these at the highs here, I think we could see like a 50% correction in the market. I mean, we've seen it happen multiple times before. The NASDAQ sold off like over 80% in the 2001. So there could be a big unwinding event. It could be very big. And a lot of people don't understand the risks involved with like the dividend reinvesting strategy or buying into the big blue chips that pay dividends. During COVID, the crash, the biggest dividend paying and the biggest blue chips all sold off more than the stock market. They were down like 45%, while the S&P 500 was only down 34. And that is because it's the crowded trade. All the passive investors are all in the same dividend, big chip, blue chips that their advisors tell them to go. But when they all panic, those are the stocks that get hit the most, because that's where the most money is, and they all want to sell at the same time. So people are like taking on all this risk in these dividend blue chips, that when that momentum stalls out, there's going to be mass exodus of those specific shares. And it is going to be a bloodbath for what people thought was a conservative strategy. They're going to realize they're actually holding the ones that can fall faster than the indexes dramatically. And it's not worth it to try and squeeze out a 3 or 4 or 5% yearly dividend, because those stocks are going to fall that much each day or each week for weeks on end. So it is definitely, people need to be aware about this market and how the markets move and the assets they're holding.
Now, over the last 40 years or so, the argument is, well, for the long term, just, buy and hold and you'll be fine. Do you see a shift coming where that really will no longer be the case, where you can just buy and hold the stock market and you'll be fine over the long run? Do you think this crash that is coming is really going to maybe change the trend for decades to come? Your perspective on that?
Yeah, I think that's a really good question. I believe that we could see this stock market be very similar. There's a lot of things setting up similar to the 2000 tech bubble burst. I think we're starting a major super cycle for commodities. And we saw a multi-year correction in the stock markets after the 2001 crash. It took like 16 years for the NASDAQ to come back. And while I think, yes, the buy and hold is a no-brainer long-term if you got 20, 40 years for somebody really young. But my whole focus is, most people now in the stock market, the average person in the stock market is like 55, 54. They hold the majority of the stocks, plus that age and up. They have the record wealth, they're close to retirement, or they are retired. The last thing they're going to want to do is lose half of their money and then not see it come back for potentially 5, 10, 16 years. I think there's a lot of unwinding. We'll see how it goes. Somebody made a really good comment on one of my YouTube videos yesterday saying, as long as we keep having a crisis to crisis, they're going to keep doing something to keep the markets going up. So there's that argument too. But overall, this this could take a decade to recover from. And people are like, there's no way. People don't think it's even possible. They say I'm crazy, but usually what people are totally not thinking is going to happen is usually what the market does. So you need to be, not reactive, but you take advantage of these moves and follow the markets and make sure you're moving in and holding only the right assets that are going up and that are consistently, moving in the markets.
And if people are interested in finding out more about your work and your active trading, how can they find you?
Sure. Yeah, they can go to thetechnicaltraders.com. And there I share kind of videos, kind of like what you and I did today, but in a much more granular level. I dive into a lot of technicals and nitty gritty and all the intermarket relationships, how if this moves, it's going to move that and all those things. And I share all my trading signals that I do with my own account. I share those, and they're ETF trades only. I don't trade individual stocks. I focus on, catching index, bond, currency, sectors that are having big waves roll through them, and we want to get on and catch those.
Fantastic. Chris, once again, thank you so much for your time, and God bless.
Thanks, Elijah. Always a pleasure.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for February 5th through February 12th, 2024, while supplies last. This week we have silver Valcambi or Asahi 100-ounce bars at just $1.39 over spot per ounce. We also feature pre-1933 gold $10 and $20 Liberties at $89 over melt and $139 over melt respectively. Next, backdated 1-ounce silver maples are at $3.75 over spot with a minimum order of 50. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.